The wealthiest man in the room doesn't panic. He doesn't shout warnings from rooftops or hold press conferences announcing his exit strategy. He simply moves in silence, repositioning billions while everyone else scrolls through their phones, oblivious to the seismic shifts happening in boardrooms they'll never enter. Bill Gates has been selling. Not a little. Not strategically trimming around the edges. Selling everything. $89 billion in liquidations, divestments, and quiet exits from positions that made him legendary. And you heard almost nothing about it. That silence should terrify you far more than any headline ever could. When billionaires sell, they don't send you an email. They don't update their social media with tearful goodbye posts explaining their reasoning. By the time you notice, by the time Bloomberg writes the retrospective article, the wealth has already been moved. The position's already closed, the parachute already deployed. Bill Gates understood something months ago, perhaps years ago, that you're only beginning to sense now. That uncomfortable feeling in your gut, that nagging suspicion that something fundamental has changed, that the world you thought you understood is operating under entirely different rules. He felt that too. The difference is he had $89 billion to move before the doors closed. Think about what that number represents. Not just wealth beyond comprehension, but conviction beyond measure. You don't liquidate $89 billion because you're rebalancing your portfolio. Across geographies, across the entire spectrum of what we consider safe modern wealth storage. Equities, bonds, real estate portfolios, private equity stakes, everything, it's not rotation. It's evacuation. And evacuation implies something specific. It means the building is on fire, and the people who built it are heading for the exits while telling everyone else to remain calm and stay in their seats. That regulators learned lessons from 2008 and implemented safeguards to prevent another meltdown. That diversification protects you, that index funds are safe, that keeping money in the bank is the responsible choice. Every one of those beliefs was installed in your mind by institutions that benefit from you believing them. Banks need your deposits. Markets need your participation. Governments need your compliance. The entire architecture of modern finance is built on the assumption that you keep playing the game even when the rules change midstream. Even when the dealers start pocketing chips, even when the house starts showing signs of structural failure. Bill Gates stopped believing that story. Or maybe he never believed it in the first place. Maybe he always understood that the system isn't designed for wealth preservation. It's designed for wealth extraction, with periodic resets that wipe out the middle class while protecting the connected elite. And when you have $89 billion in connections that span the globe, you don't have to participate in those resets. You can position yourself ahead of them, move your wealth into assets that survive the transition, and emerge on the other side even wealthier while everyone else is left holding worthless paper claims on institutions that no longer exist. This isn't the first time this has happened. If you study monetary history, if you look beyond the sanitized textbooks and examine what actually occurred during currency collapses and financial system resets, You see the same pattern repeating over centuries. Weimar Germany, the fall of the Roman denarius, the Mississippi bubble. The middle class, still holding paper promises from institutions they trusted, loses everything. Jobs disappear. And when the dust settles, when the new system is established on the ruins of the old one, the same families that exited early buy back everything at pennies on the dollar, consolidating even more wealth and control than before. Bill Gates studied this history. He funded research into pandemic preparedness, into supply chain fragility, into monetary system stress points. He didn't do this as some philanthropic exercise in abstract risk modeling. He did it because understanding systemic vulnerabilities is how you protect generational wealth. It's how you ensure that when the restructuring comes, and it always comes, you're positioned correctly, not with the masses holding paper, with the elite holding tangible power. So what did he see that triggered $89 billion in liquidations? Start with the obvious. Global debt has crossed $300 trillion. A number so large it ceases to have meaning until you realize it can never be repaid. Not through growth, not through austerity, not through any mechanism that doesn't involve destroying the purchasing power of the currency itself. Central banks know this. Finance ministers know this. Every serious economist not paid to lie knows this. The only question was timing. When does the charade end? When does the music stop? When do the people holding bonds and savings accounts and pension promises realize they're reholding claims on institutions that are fundamentally insolvent? Then consider the velocity of money, collapsed to levels not seen since the Great Depression, despite unprecedented monetary stimulus. That means even though central banks printed trillions, even though governments spent like drunken emperors, the money isn't flowing through the real economy. It's stuck in asset markets, inflating prices of stocks and real estate while actual productivity stagnates. That's not a healthy economy. That's a terminal patient on life support, where every intervention produces diminishing returns and larger side effects. Gates saw that divergence widening and understood what comes next. Either central banks let asset markets collapse and trigger a deflationary spiral that destroys the banking system, or they print even more aggressively and risk hyperinflationary loss of currency confidence. Neither option ends well for people holding traditional savings vehicles. But there's something deeper happening, something that goes beyond conventional economic analysis. denominated in a currency that's losing purchasing power every single day? Your retirement account tied to stock markets that are more disconnected from economic reality than at any point in history. That's not security. Told you the system is sound. Media, funded by financial industry advertising, told you markets always recover. Every institution you were taught to trust gave you advice that benefits them while exposing you to risks they reactively exiting. Bill Gates didn't follow that advice. He doesn't have a financial advisor telling him to stay the course. He has entire teams analyzing systemic risk, modeling collapse scenarios, and positioning his wealth accordingly. While you were being told everything is fine, he was selling everything. Now you might think this is exaggeration, that surely someone with his public profile, his philanthropic image, his carefully managed reputation wouldn't be engaging in what amounts to abandoning ship. But that's precisely the point. The public persona is theater. The foundation work, the global health initiatives, the climate change advocacy, all of it creates a narrative of someone invested in long-term human flourishing. Someone who believes in the future and is working to improve it. And maybe he does believe that on some level. But believing in abstract human progress doesn't mean trusting your wealth to institutions currently in collapse. Those are separate calculations. You can believe humanity will eventually figure things out while also recognizing that the current financial architecture is doomed and positioning accordingly. The $89 billion sell-off isn't a conspiracy theory. It's documented through CAC filings, through foundation disclosures, through real estate transaction records, through holdings reports that anyone willing to dig through dense financial documents can verify. The information is public. What isn't public is the analysis that led to those decisions, the models he's seen, the conversations he's had, the data points that made liquidation the only rational response. Liquidate positions faster than at any point in his career. Watching markets hit new highs while insiders sell. Watching economic data diverge from lived experience. Watching debt accumulate at rates that mathematically guarantee default or debasement. Watching your purchasing power decline while being told inflation is transitory. Then everyone realizes simultaneously that the exits are too small for the crowd trying to get through them. Then wealth that took generations to build evaporates in days. Then new systems emerge that benefit the same people who exited early, and the cycle begins again. You're watching the first stage of that pattern right now. Bill Gates sold $89 billion because he knows what's coming. The question isn't whether he's right. The question is, what you are going to do with the time between now and when everyone else figures it out?